YouTube. We got a lot of economic data to talk about. Crypto all over the place, going up to 106, falling down to 101. Trump tweeting left and right, tariffs left and right, Japan, China, Mexico, everybody's getting it. Crazy, crazy week of economic data. That's what we're here to talk about. Lots of things on how it relates to crypto. We're going to talk about it all here. Before we get started, though, welcome back to the channel. For those that are new, my name's Doc. I'm a resident physician throughout the day, and at night, I take you guys on my investing journey. Get your popcorn ready, guys. Buckle in, get nestled in. We've got kind of a lot to talk about. I know I feel like I say that on every video, but we actually have a lot to talk about it. Let's just jump right in. I respect your guys' time. Look at all these tabs up here. We got a lot we're going to go through. Promise I'm going to make this the best 10, 15, maybe 20 minutes of your day. Try to break down some complex topics for you. Bitcoin, wild day. Looking at the 4-hour chart, sitting at around 102, 102.5. Earlier today, we flirted with 106. We were a stone's throw away at 106. And then what happened? We had this pretty big giga candle down. We're getting a little recovery. We did wick down to 101. So what happened? I'll tell you what happened. Papa Trump, he's hitting tariffs on Mexico, Canada, and China. And guess what? These begin tomorrow, right? Filming this Friday night. Coming to you guys late on a Friday night because I just miss you. I wanted to get this info out as fast as I could. So this is why, unfortunately, the market took a sink. Trump was tweeting about tariffs, but there is some silver linings here, and we're going to talk about that in just a sec. Bitcoin dominance fallen down a little bit. We like this. Now, granted, we are on a smaller time frame here, right? This is the 4-hour chart. Kind of love the 4-hour chart just because I'm a little bit of a degenerate. We finally broke this trend line, and this is good. It's at 58.5%. I'm not going to get too excited. I'm not going to get out of bed for a 58%. Really want to see this fall down to 56 and below. That's where we kind of start having fun. For those that don't know, Bitcoin dominance, this is the percentage of Bitcoin that takes up the entire market cap. We want this percent to go down because as this percent goes down, that means the whole market cap of crypto is made up of altcoins. And I know y'all are deep in the altcoin bags. Total 3, we're going to talk more about this later. This is the entire crypto market minus Bitcoin and Ethereum. It's a proxy for the altcoin market, kind of just hanging out. It's actually very much trading in a channel between here and here. So we're going to watch this. Not a whole lot of news. So Trump's talking about tariffs. This is the whole crypto market. It's kind of weird because Bitcoin took this huge jump down, but alts are actually doing kind of decent. And that makes sense because we saw Bitcoin dominance go down. So some funds flowing in to other projects. Pengu, this was down pretty big a couple days ago. So a nice bounce here. ETH, I'm going to come back to this. I'm planting seeds. This is probably the most important chart in crypto right now. Stay to the end of the video. I'm going to break it down for you. So ETH was doing really well. It was kind of going back and forth in this channel. And again, this is on the daily chart. We wicked up. We finally kind of broke out of this channel, but now we're coming back to test it as support, right? So it was resistance. We finally kind of broke through it. It's bouncing back now. This is a daily time frame. We really need to look at this on a weekly time frame. So that'll be Sunday afternoon for us here in the US. This is 100% the most important chart in crypto. I promise I'm going to break it down for you. Okay, so we had a busy week of economic data. This 100% relates to crypto. Let me just really quick, we're going to review the week really quickly because it's going to set us up for next week. Follow along. Promise I'm going somewhere. So on Wednesday, we had the Fed interest rate decision. And guess what? We all knew the interest rates were not going to be cut, but we were really just waiting to see what Powell had to say about quantitative easing or tightening in the balance sheet. And what does he say? The committee will continue to reduce its holding of Treasury securities and agency debt and agency mortgage-backed securities. Guys, we talked about this earlier in the week. This is not a surprise. So I'm going to really quick hide the Bitcoin chart. What is he saying here? He's saying the committee is reducing its holding of Treasury securities. That's what's happening here. We're in quantitative tightening because the Fed is reducing its balance sheet. This is typically not good for crypto, right? The Fed has a little under $7 trillion on its balance sheet, mostly mortgage-backed securities and treasury bonds. We need this to go back up to 9 trillion, right? Because that means we're flooding money into the market. And that's good for risk on assets like Bitcoin, like the Russell. So I'm going to overlay the Bitcoin chart on this, right? I'm overlaying the Bitcoin chart. That's the chart in the white line. The blue line is a Fed balance sheet. Look what happened right here. This is where we ended quantitative tightening, right? The Fed balance sheet's coming down. And then we started increasing the Fed balance sheet right here. Well, look, as this is happening, Bitcoin starts to rally, right? We have this peak. This is the second peak, November 2021. And then also look what happens. As we start reducing the balance sheet, Bitcoin starts to go down. Now, obviously, there are more factors at play here, right? So we need the Fed to turn this around. When is the Fed going to start increasing its balance sheet? Well, we're going to talk about that in just a second, but hopefully within the next few months, because as the Fed starts to put more assets on their balance sheet, that increases investor confidence. People start spending more money. Stock market goes up. As the stock market goes up, so does Bitcoin. So this was the first thing that we talked about on Wednesday, the FOMC meeting and this press conference. Well, on Friday, today, we had core PCE. So core PCE, this is a measure of inflation that the Fed prefers. And we were right at expectations, right? So core PCE month over month, the expectation was 0.2%. It hit 0.2%. So we're right at expectations. That's good. Same with year over year. We were expected to be 2.8 of core PCE inflation. We came in at 2.8. The market likes this, okay? If the market does not like surprises, it likes very predictable, methodical economic data that comes out. So this was good for the market, right? This came out, Bitcoin was doing well. And then we got this tweet, right? We were kind of coming up throughout the day. Like I said, we were flirting with 106. And then Trump announced the tariffs. Real quick, this is my BTCC. I'm going to have a link down below in the description. You guys can get 10% bonus on your first deposit. Guys, this is up to 10 grand. This is actually pretty awesome. You also get way lower trading fees. So this platform on BTCC, guys, it's no VPN, no KYC, so you don't got to give any of your personal information. You don't got to hide your VPN or anything like that. And you guys can do up to 500x leverage on Bitcoin, Solana, ETH. I don't know if I'd necessarily recommend 500%. I think the most I've done is like 80. But if we get a nice dip like we just did today, it could be advantageous, to put a little bit of a lottery play in, put a 10x in, and you can really increase the size of your bag. So link down below, check them out. They're a partner of the channel. So if you sign up with them, it does help invest with Doc. All right. So we talked about core PCE. If you haven't been able to tell so far, we're going through all the economic data for this week, right? So I'm breaking it down so you guys know what happened this week, and I'm going to give you the thesis for next week at the end of this video. If you're getting any value out of this, consider hitting like and subscribe. Really helps the channel out. Okay, so this is really, really important. This is new jobless claims, right? So these are folks who are, in essence, saying, hey, I'm not working anymore. And obviously we track this really, really close. Look at the yellow line. Okay. This is initial jobless claims. So folks who don't have a job and they're now telling the government like, hey, I'm out of work. I need some unemployment. This was lower than expected. So that's good, right? The government, we expected, hey, we're going to have this many people filing for unemployment or have initial jobless claims, and it came in lower than expected. So that's good, right? We can see jobless claims are coming down. The gray line, it's a moving average, but the yellow's the data in real time. This is coming down. And why is this important? Because initial jobless claims can give us some predictive value on unemployment rate, right? So on Friday of this upcoming week, February 7th, we are getting unemployment rate. Now, the consensus is right around 4.2%, 4.1, 4.2. That number will get solidified. That's like what the expectations are this week. Well, if initial jobless claims are lower than expected, that could mean we have a favorable unemployment rate. And having a low unemployment rate is good. It means the market is doing well. If the market's doing well, the stock market's doing well, and Bitcoin and the stock market, they're very, very heavily correlated. Now, there is a little bit of a qualm to this, right? Some bad news is good news and good news is bad news. If the economy is doing really, really well, right? Unemployment rates falling, initial claims are falling. That's good for the economy, but here's why it could potentially be bad. Jerome Powell is not just going to cut interest rates just to pump our bags. Typically, they cut interest rates to keep the market afloat, right? To help stimulate the economy. Now, if the market's doing really well, it's kind of tough for Fed Chair Powell to cut rates. Now, he has said that we're probably too high. We're probably above the neutral rate. The neutral rate is this kind of imaginary number or imaginary rate that the Fed says everything's in perfectly balanced. And he's kind of hinted that we're above that. So we're going to follow it this week. It comes out on Friday, and this will 100% have influence on Bitcoin. Okay, so we just talked about unemployment rate. This comes out on Friday. This is the unemployment rate here. Obviously, this huge spike up. This is because of the coronavirus, the pandemic, right? People stopped working. Right now, I'm going to kind of blow this up a little bit. We had an initial pop up, then we came down, then we came up, and now we came down. We've kind of been flirting in this low 4%. So if the unemployment data comes at or below 4.2% on Friday, it's going to be good for the markets. If we kind of get a scary print where unemployment rate is kind of hiking up 4.3, 4.4, that could be bad. And in the short term, Bitcoin would likely fall down. So we're talking about unemployment rate, initial claims, right? How the government can help mitigate some of these issues. Well, guess what? One way that they can do that is with the interest rate. Ignore this yellow line for now. This is the U.S. federal funds rate. This year was our first 50-point drop. That was this summer. And then since then, we've had two 25 basis point drops. So far we've dropped or we've cut rates 100 basis points, and that's equivalent to 0.1%. Now, I just want to show you this Bitcoin chart because I do think this is really interesting. So this is on the monthly candles, right? Each candle's 1 month. Look what happened when we paused rates in the summer of 2023. Okay. Instead of increasing rates, the Fed announces a pause. Bitcoin shoots up, right? So then here we start lowering rates. Bitcoin shoots up. You can make the argument that there is at the bare minimum a loose correlation that low interest rates favor high risk assets like Bitcoin. Well, we have the Fed watch tool here, and this helps us predict when rate cuts are going to happen. So we just had a Fed meeting, FOMC meeting last Wednesday, okay? The next Fed funds meeting is March 19th. So a little over a month. Right now, there's an 83% chance that we are not cutting rates in March. So right now we're at 4.25 to 4.5 for the Fed funds interest rate. It's a range. There's an 83% chance that that's where we're going to be in March. There's a 17% chance that we get 0.25% interest rate cut in March. So that would bring the Fed funds range from 400 to 425. This isn't exciting. What is exciting is if we look at the aggregate. Do not get confused by this table. I promise it's not difficult. We just looked at this. We just said in the March 25th meeting, there's going to be an 83% chance that the rate doesn't change because this is where we're at right now, right? We literally just looked at this. Fed funds, March 19th, 83% chance. We go to aggregate. I'm going to zoom in so y'all can see this a little bit. There's an 83% chance, but that's for the March meeting. But in May, predictions are saying, hey, this is 50-50 that we get a rate cut, right? 50-50. That's pretty great, right? So we could have our next interest rate cut in May. They're saying, the market's saying there's a 98% chance that we have at least one cut by June, right? So this is good. This is saying that cheaper money is coming. It's just going to be a few months, right? So that's bullish. Another bullish thing is this tweet here. The M2 money supply is pumping, right? So let's look at this. This is the total money supply in the US right now is right around $21.5 trillion. Now, he's saying it's pumping. I actually brought this up myself. It is increasing, right? We've been lowering the Fed funds, the total money supply in the US since like 2022. It's been coming down. Well, guess what? Now we're starting to print money again. And typically, when we print money, we're flushing money into the system. And again, this favors risk on assets. So one of the goals when I go over this stuff is to kind of just teach you all the basics, so that when you see all this info on Twitter, you can kind of connect the dots for yourself, because there's a lot of reoccurring themes here, right? I'm currently working on my MBA right now, and it's like we see the same themes over and over and over. And one of my goals with this channel is to take some of these complex economic principles or financial principles and just break them down into their smallest pieces and make them digestible, and then obviously relate them back to crypto, because that's what I'm passionate about. I think that's what you're passionate about if you're watching this. So I thought this was kind of an interesting little thing here. If we put the bull market support band on this, the total US money supply was below its bull market support band, and now it's increasing. And this is actually a good sign, because if we just look at the total money supply for the past 10 years, it's almost always above its bull market support band. So to see that we were below it and now we're increasing back above, what this tells me is that the US is ready to turn on the money printers. We've all seen the meme of Jerome Powell with the money printer spitting out money and how that's good for risk assets. Okay, I'm going to kind of tie this all together. We're getting close, guys. We just showed the money printers turning back on. We're going to get interest rate cuts coming soon. Other folks are going in. They're ending quantitative tightening, right? So the Bank of Canada, they just ended quantitative tightening. Well, what's quantitative tightening, Doc? We looked here. We looked at this chart here. They just end quantitative tightening, which means Canada is stopping the reduction of their balance sheet, and they're going to start turning the money printer back on. So Canada, in essence, just did this. Now, if Canada's doing it, it means that we're likely close, right? We tend to follow, or we're typically a month or two behind these other large nations. Now, obviously, the Bank of Canada does not have the same weight that the Bank of the US carries, but this could be predictive, or this could allude to the US may end quantitative tightening sooner than later, okay? All right, so some other kind of bullish news pieces that I wanted to talk about, because I do really think the macroeconomic situation is shaping up to make for a bullish Q1, Q2 of 2025. Freaking Polkadot just filed an ETF. I would have never thought this. Polkadot, I mean, I'm not hating on Polkadot. If you have Polkadot, I really hope your bags pack or blow up. I genuinely hope they do well. I just didn't expect Polkadot, of all projects, to be filing an ETF. But guess what? This is bullish for all of crypto, because a rising tide raises all ships. Okay, another big news today. The SEC approved Bitwise Bitcoin and Ethereum ETF. This just goes to show these ETF products, these crypto ETF products, are starting to build steam, right? They're really starting to take off. And guess what? The more products that come to market, it makes it more mainstream. Crypto becomes more acceptable. And that, my friends, is going to lead us to an altcoin cycle in 2025. We got more states introducing Bitcoin strategic reserves. I actually really like this website. This is from Marty Party. This tracks all the sites who have introduced legislation to hold Bitcoin as a strategic reserve. So all the states in green, these are folks that have introduced a Bitcoin strategic reserve. And then the states in yellow, Arizona and Utah, they're actually voting on this, right? So it feels like just a couple days ago, there was like a handful of states that were introducing legislation to start a Bitcoin reserve. I'm in Texas, and this was one of the first states to introduce it, so I was proud about that. But guys, this is going to be a sea of yellow and orange once these Bitcoin bills continue to become introduced. There's another thing that I want to talk about, and I'm not going to spend a lot of time on this because I don't want to get too political, but a lot of these states are voted Republican this year, right? They lean right. And the majority of the states do, just because of the way that the electoral map and electoral college is set up. More and more states are going to introduce this, right? And this is going to kind of create some momentum. Guys, at the end of the year, half the states, right? We're at 19 right now. We're going to be at 25 in just a matter of time. It really is just a matter of time. Okay, so I said ETH, it's the most important chart, right? I kind of flirted at it here. We're hopefully having a little bit of a breakout. Why is this important? I'll tell you why. This is ETH on a 1 week view, and I'm going to add in white total 3. Total 3 is the entire crypto market minus Bitcoin and ETH. Total 3 is synonymous with the altcoin market, right? Because it's all of crypto minus the 2 biggest coins, Bitcoin and Ethereum. These mirror each other pretty dang closely, right? So if we can get an uptrend in ETH and ETH starts blowing up, guess what? There's a high probability that the entire altcoin market is blowing up. And that's good for our alt bags, because I know all of us, we are dirty degens, and we're probably over allocated into ETH. So guys, we're all rooting for ETH. You're probably thinking like, Doc, I don't have any ETH in my bag. Guess what? You need to become the #1 cheerleader for it, because it's going to pump our alt bags. Okay, I want to end on these last 2 things. Simple AI. This project is not released yet. They are an awesome AI project on Base. They're going to be doing their fair launch within the next week or so. I've been told by the team they're getting their KYC and audits done. They also have a ton of AI agents running in the background. A lot of their tweets are being automated right now by AI agents. They're going to have an AI agent deployer, so you can actually deploy your own AI agents. It's going to be gnarly. I'm going to leave you with this. I'm not going to play the audio, but President Trump, the most crypto favorable president in the US, says never sell your Bitcoin. Guys, this was a longer video. The goal was to go through last week's economic events and how that affects Bitcoin and your crypto bags. And then we use that data to extrapolate what next week is going to look like. I would not be surprised. Bitcoin, its next target is going to be in the 120s, right? It takes these big jump ups. We're going to chop around for a little bit. We might as well just show it on the chart. I hate talking about things and then not showing you. Bitcoin has these chops. We're going to chop around and it's going to take a big jump up, right? We chopped around, we took a big jump up. We chopped around, we took a big jump up. We chopped around for 8 months and then we took a big jump up. Guys, that's all we're doing right now. We are chopping up right here before we take our next big run up. I really think 120s is going to be our next cycle. So keep an eye out for that. This was a long one. If you guys stayed this long, drop the popcorn emoji down below. I usually don't like doing videos this long, but I was just excited. I wanted to go through all this data, build a little bit of a thesis with you. Let me know down below. What did you guys think of this? Do you like the longer formats? Do you like the shorter formats? I literally read all of the comments. If you got any value out of this at all, hit the like button, subscribe, check out the BTCC link down below. Genuinely appreciate all your support. See you guys on the next one.